focused on startups, boardrooms, and corporate governance practices. I'm delighted to welcome an exciting panel this afternoon. I have with me Suresh Narayanan of Nestle India, Kunal Bahl of Snapdeal, and Ritesh Agarwal of OYO. And I'm looking forward to an hour of great conversation. The topic we've been handed today is all hands on deck, dealing with uncertainty and event risk. And I'm going to start my first question with a definition. What is event risk? Because event risk, as we've discovered in the last decade, can range from a global financial crisis that's paralyzing the financial markets to a pandemic that paralyzes the entire world, countries, economies, societies, to maybe a 30-minute expletive-laden phone call with your wealth manager. That could be a very, very difficult PR situation for young companies. So let me go to the veteran on this panel. Suresh, how would you define event risk? How would you define uncertainty? How has all of that changed for companies over the course of the last decade or so?
Thank you, Menaka. Thank you for that question as well. You know, one of the things I've learned in a long time in the trenches is that crisis doesn't come with a calling card. So many of us, companies who have set up business contingency plans and operating principles and various other methodologies in order to mitigate the impact of a crisis, seldom realize that every crisis is different. It's a bit like, pardon my saying so, COVID. The Delta is different, the Omicron is different. What comes later would be different. So it's a bit like that with crisis. Some of it, as you rightly said, is global in nature, and I think I would put them global and local related kind of stirs as far as crisis is concerned. The second is, and what is today becoming more important that I notice, is what I call self-inflicted crisis, which is sometimes you do the kind of things that you should not be doing, either misdemeanors or behaviors or attitudes or statements or pathways, something that gets the attention of an already stressed population. And I think this is where the sensitivity of the person and really the leadership traits in terms of the purpose and values of that leader becomes so very important. So very important. I mean, how sensitive, you talked about 30-minute conversations. I mean, pardon my saying so, but under any circumstances, that is shooting yourself in the foot. And at this time, it is going to make things worse. So today, more than the global crisis that affects us all in some sense or the other, I think on the panel, it affects Kunal to a certain extent, and Ritesh to a different extent, and me to a different extent. That's a kind of situational impact because of a crisis. But all the other self-inflicted ones is really what is creating the issues. And more than often, it boils down to leadership, the leadership ethos, and what it seeks to do in difficult times.
Okay, I'm going to follow that up in just a bit, Suresh, with questions on specific instances at Nestle and the processes that y'all have put in place, how they've changed over the years. But let me go back to the issue of what is event risk, and take that question to Ritesh and Kunal, because their businesses are at different stages from, let's say, a Nestle public listed company, been around for so many years. And so, Ritesh, in a young company's existence, an event risk in the early years would be viewed very differently, let's say, versus an event risk in the mid-years. And this is before you even go public. How do you view this? How do you structure this? What's the matrix you put in place to understand what is event risk, what is uncertainty, and what is crisis?
Absolutely, Menka. First off, thank you so much for having me here. And I'm glad that I'm coming after Suresh sir on this, because I fully agree with him on saying that the breadth today of event risks are, ranges from as little as public conversations, all the way to how do you execute your projects, processes, and leadership. And I think within this, let me try and split my answer into three parts. The first bit is to just share, fundamentally in the early years, event risks were so broad that our focus was essentially just come back every day and do your job a little bit better, and the company will probably be able to manage a bunch of these risks. COVID, in my view, fundamentally is a turning point in that, where it has come about, and on one side, of course, created a challenge, but on the other side has also created a significant opportunity. Think about, and of course, the world has never seen something as tough as COVID across businesses for probably a century. So for instance, if you think about World War II, even today, when you read about so many companies and cases, you hear about post-World War II, there were these three big changes due to which companies got created grounds up or companies reinvented themselves. I feel that at OYO for ourselves, but also in general, I think that companies will see COVID as a turning point to both how event risks are seen, but also how event risks are used as transformational opportunities for the future. The second bit is talking a little bit about OYO itself. Look, OYO is in the travel business, which was probably one of the most impacted with the COVID specific outcome. In the first 2 months, frankly, there was a 101 crisis playbook of cash, work from home. How do you build business continuity? How do you make sure that you design your supply for new type of demand? We were one of the biggest suppliers for quarantine accommodations, similar. But those were just immediate responses. The focus primarily was after that on 2 months, I and our management team spent time on reflecting and saying that if this goes on for 2 years or 3 years, what will our company look like? And what are the structural changes we need to do, around ourselves? Going back to the perspective of what does leadership do at times of crisis, like Sureshji mentioned. And last but not the least is the impact. Pre-COVID, we used to go to our own. We saw that fundamentally there were three things changing with COVID. Tech adoption was growing like never before. Individual owners who used to earlier say that I would like to speak on phone for service, now were okay using mobile apps because they were using mobile apps for grocery delivery and for all kinds of services that one expected. Second, users' expectation of safety and security increased. And third, companies which had a bigger scale could get bigger by expanding their market share, especially because smaller businesses were not able to keep up with the innovation required. So we used all three of these to our advantage wherever we could. For example, on technology, earlier we used to go to owners with physical BD managers to give our software. Now, large part, almost 30% plus of our storefronts come from self sign-on, which is owners come online, enter a bunch of details and use our software, or through redistribution channels. For instance, in terms of heightened levels of safety and security, we launched Vaccine Aid, where all the staff are vaccinated. We would tell this upfront to the customer, or we partnered Unilever for sanitized stays tags. These hotels had higher revenue by 20, 30, 40% than other hotels. Or the last is in market share. We felt that this was the right time to prepare for leisure, road trips, etc. segments to get more share. So this is just what we did, but clearly, there is more learnings than what we've been able to implement in the last 2 years, Menaka.
Ritesh, you made a very interesting point about what is a first reaction to an event, whether we call it an event risk or a crisis or an opportunity or an uncertainty, and what is a more structured reaction. And I want to come back to you to talk a little bit more about how to deal with a structured reaction, right, based on the learnings. But before that, Kunal, nowadays even listing is an event risk, as some companies might suggest. Especially if your stock goes no way but down. How are you looking at event risk at this stage of the business and at this stage of your entrepreneurial life?
Yeah, thanks, Menaka. It's great to be here and great to hear Suresh and Ritesh's comments. I actually, one of the biggest changes I've noticed in the last decade of running a digital business is that 100% of our customers are digital, right? So they are always the first customer to the 100 millionth customer or Snapdeal would have would be digitally connected. What has happened over the years is, as digital connectivity has become more and more pervasive, there are very few places where companies can now also hide if they do something inappropriate. There may have been a time 10 years ago where, or 15 years ago, some companies could have gotten away with some practices just because there's no, outside of something showing up in the newspaper or on a TV channel, the chances of it becoming a widespread crisis were relatively limited. Now that's not the case. There are so many avenues in which something can become a crisis, and the virality with which any news that can create or put fuel to the fire or fuel to a crisis have just grown in geometric progression. Right? We have some of the examples you cited of recent occurrences also, and I feel that this shift has largely happened in the last 5-7 years. Even as recently, in the larger scheme of things, as recently as 10 years ago, companies like ours and others would face crisis, right? Some customer had some issue, etc. And they would never become sometimes as big an issue as sometimes they become these days, where the smallest of issues can just completely fireball into something that's on the front of every news app, starts trending on Twitter, and then the whole company goes into crisis management mode. I would say that in a way that's a good thing also, Menaka, because I know we all know the bad of it, right? We all know that it can also be bad, but there is also something good about it, because companies that operate with the right intentions, with and are willing to deal with crisis in an honest and upfront manner tend to benefit from it as well. From that level of digital transparency and pervasiveness that exists now, which was also not the case earlier, right? Like it's if there was a crisis your company faced and showed up in the newspaper, you almost had no way to set the record straight. Now at least you have a way to set the record straight as well, as quickly as the crisis had fireballed into something much bigger than you thought. So in that way, I think the world of crisis and crisis management and how companies react to them both have evolved quite considerably in this ubiquitously connected digital world, and a world that we now live in.
Okay, yeah, I want to talk about each one of your individual experiences in your businesses, and there have been moments of pivot, moments of crisis. But before that, let me come to a completely external event. And I know you might be a little uncomfortable, each one of you, commenting on a situation that's not personal to you, but I still want to understand how you diagnose it, and that's where I'm coming from. Kunal, let me come back to you on this. This Ashni Grover Bharat Pay event, right? It sort of links the responses all three of you have made, right? From what Suresh said about self-inflicted, event risks or self-inflicted uncertainties or crises, to what you're saying is that there's nowhere to hide. What do you think this incident speaks of? The collapse of what within a company when the leader of that company is caught in this very, very strange, difficult, ugly situation?
Yeah, Menaka, I feel that at some level, long time ago, one of my colleagues gave me great advice. He said, Kunal, never speak ill of someone. Definitely don't speak ill of someone in front of other people, and definitely don't do it on the phone, right? And I think if sometimes you just follow very basic, very, very, very basic, guidance like that, where you just have simple, polite conversations with everyone, explain your position, explain your displeasure with the situation if you have any. I think if they have to get sorted, they'll get sorted. If they don't have to get sorted, they won't get sorted, even if you start adhering to certain measures which may be unsafe.
Okay, I'm not trying to personally judge the person involved here. Who are we to judge? What I'm trying to understand is that something has gone wrong here, that every check and balance that would have applied to a business leader seems to have failed. Let me take that same very question to Suresh and to Ritesh. Suresh, would you like to sort of diagnose the situation for us, saying, what do you think collapsed here? Why do you think that they ended up in the situation where they are today?
Look, I know it's not my task, and neither is it my style to excoriate anybody. So therefore,
not the individual. I'm trying to
to
understand the process.
Yeah, I think,
Yeah.
for me, in my experience, Menaka, one thing I've seen is in any crisis that is created, that happens, at least half of the crisis is because of you. And there are 3 or 4 things that are important in personal leadership.
So sorry, did you say, sir, because of you, as in the individual involved is
Because of you
responsible?
as the individual,
Got it.
And I think we don't talk as much about it, or maybe now the conversations are becoming more important. But at the pivotal leadership level, purpose and values have never become as important as they are today.
Okay.
Whether it is the purpose of the organization or the values of dignity, of respect. One of the things that Kunal talked about his friend giving him that advice. I can quote to you from Kabir, who's I'm a great fan of Kabir. And Kabir said, "Aisi bani boliye, मन का आपा खोए, औरन को शीतल करे, आपू शीतल होए." Speak the language, speak the words that not only make you happy, but it also makes the listener happy. And I think in this world of very shrill rhetoric, where valuation is more important than value, we are descending into this kind of behavior, which then pivots into, this is what I call conviction. So the conviction of a leader translates into a corporate structure, because then the structures are created in order to meet this particular conviction of the leader. It then leads to a culture, the culture at the board, the culture of the management, the culture of the employees of the company. And then ultimately, this completely negates the competence that the company has built up. So I call it the 4 C's: conviction, corporate structure, culture, and competence. And if you look at the root of any of the crises that we face of leadership, it all begins with a personal moment where you snap. And I think the task of introspection, in our cultures, we talk about introspection, we talk about meditation, we talk about going back to humility and to your roots, and to the hard reality of the fact that all the billions that you make here, you leave behind on this planet. If you were to realize it, I think you learn temperance. And when you learn temperance, and when you have a strong moral backbone, you avoid these kind of mistakes. The stuff that Ritesh talked about, cataclysmic global changes where he has to change the business model, pivot everything, or what Kunal has done. These are things, I don't think, any great moral pivot is going to help in preventing these things. But these kind of events, ultimately, leadership and you, and I've read somewhere, Menaka, leadership is not about leading others. It is about being confident in yourself.
Okay.
When you are less confident about yourself, you manifest yourself in behaviors and actions that are detrimental to the interests of others. But when you are confident about yourself, and when you are not trying to show that you are larger than life, or you're not trying to show that you're bigger than God himself, then temperance comes in. And then you're able to not only face your life well, but you're also able to face a crisis well. So enough of my philosophy.
But you used a great word, sir, temperance. I want to take that to Ritesh. Ritesh, that's not something we see very often in the startup world. Entrepreneurs that are applauded for being aggressive, ambitious, betting their lives in the bank on visions, often seem to lack this. And so, again, this is what I'm defining the scope of our conversation. I'm looking at an external event. Who would you hold responsible for, let's say, what's happened right now at Bharat Pay? Is it the individual? In which case, then we should not talk about it, because we're not sitting here to judge individuals. Do you think there is a corporate board culture process that has failed? Or do you think this is in some ways representative of a breed of startups where temperance is lacking?
So I think, like both Kunal and Suresh sir mentioned, I will probably abstain from talking specifically about the situation, but probably more about the learnings or,
Sure.
inference about just generally the context that you mentioned about, temperance, therav around ourselves. I think, the first bit that is critical to know is that while the startups that there is a lot of this ambition and aggression get more talked about, but reality is there are a large number of startups which have, fairly decent operators as if they could be operating any company. They have reasonable amount of terav, and it is not required that you be more aggressive and you have a certain sense of attitude to build a good business. A good business needs good service to customer, good margin, good retention, and so on is what I have learned. Linked to it is the second thing, which is saying that in the new world we live in, the expectation from the leader is dramatically more, right? You're seen as somebody who represent your company, your brand, the values and the purpose, as Suresh sir mentioned. And given that, I think it is just critical to not just lead by example, but also surround yourself with people who constantly remind you, of challenges. I'll tell you this, our company itself went through significant growth challenges. So
Yes.
I was at an event. Kunal pulled me at a corner and he said, Ritesh, here are two things I would watch out for. 2 days later, I and our management got together and we do something every 6 months. We call it a reflection session. It's called reflection session, but it's really a cathartic session where everyone is expected to say bad things about what we are not doing well and what we can do better.
Okay.
It sounds like a tough thing, right? Inspired, actually, I think, if I'm not wrong, again, I shouldn't be calling out his name. Inspired by, actually, I've heard that Mr. O.P. Bhatt used to do this extremely well.
At
Uh,
SBI.
at
At
SBI.
State Bank of India.
Yes.
Okay.
But hearing, that conversation just completely kills the water cooler conversation at office, right? Because then everybody knows that whatever challenges are, it's out here in the open, and we're going to solve it together in times to come. So net, I think, I just believe that open conversations and surrounding yourself with the right people just enables, leaders to just be the best version of themselves is my learning.
Okay. Now, Ritesh, in 2015, you went through, what one might call a growth event risk, if I can describe it that way, right? There was runaway growth, and with that came problems that you'd probably not envisage, ranging from, let's say, financial metrics that weren't meeting what the sustainable business model would be, to poor customer feedback. Now, I'm trying to connect individual leadership approaches to structured or governance structures in companies as they evolve. So talk me through what the evolution has been since then. How have you put in place processes, structures? What did you do in 2015-16 that served you well? What do you think was a poor reaction or a poor response to that situation? And how have you corrected it in the years since?
Yeah, look, I think I'll probably, if you were to think about high growth to the place where we are, I think there are 3 to 4 structural evolutions. The first thing is every company which is extremely small, serving like thousands of customers as we were in 2013, 2014, will go through a significant growth at some point of time. Hello?
Yeah, we can hear you.
Yeah. So I think in the same format, our company also saw significant growth of large number of storefronts as well as customers and large number of geographies being launched around ourselves.
Yeah.
I think there are, as an outcome of it, the good things where the company saw significant amount of growth. We rightly so recruited some fantastic senior leaders around ourselves who were helping manage through such kind of outcome.
Okay.
But it came with natural challenges, as you mentioned, of saying that are we able to make sure that at that scale we can continue to deliver the excellence in terms of consumer and merchant level satisfaction. So as a part of which, as and when our company's management and board towards, I think, end of the year, saw these as structural challenges, we said, for this quarter, we are probably not going to grow. And let's take a pause, and it should be okay to take that pause and ask yourself, what do we need to do to make sure that the current scale we consolidate it and then double down on things that were working? So here were the things that we did to consolidate, and here are the things that we built for scale. Things for consolidation was geography focus. We said we will only focus in geographies where we have market leading position and healthiest consumer matrix, owner matrix, and margin matrix. India, Indonesia, Malaysia, and North Europe came out to be those markets, and that's what the markets we're focused on as we speak. Second thing we said is we will only focus on business model that works for us. So 87% of our merchants or our owners were in the standard revenue share model. We thought that that incentivized them to provide a better service, and similarly consumers to also have the best outcome in NPS. So we went to the rest of the 14% merchants and said we will operate only in one business model, even if it means a small short-term revenue risk. And third is, as an organization, we changed our KPIs to be 50% to 60% focused on service and rest to be focused on growth rather than 60, 70, 80% being focused on growth. These are things we did to consolidate. On the other side, in terms of growth, there were multiple things that were going right. I think we saw density going deeper in specific locations was doing well because consumers got more choice and owners got better ability to get broad sense of user base. Second, we saw that our high quality of leadership recruitment was working for us. So we doubled down on that. In the board, for last 2.5 years, majority of our board members have been non-executive, which is non-investor and non-management. Just like having people like Troy, who was CEO of Global Starbucks, or Steve Albright, who's been audit chair of 12 plus public companies in the US. I think it just, you're always influenced, like I was saying earlier, with the average of 5 people around you, right? So the more people you surround yourself with who have gone through similar experiences just gives you better probability of success is what I have learned. So this is sort of what the journey has been over the years. That is, first consolidate and then double down on things that are working. And that sort of helped us to continue to grow while ensuring that we keep improving on other metrics as well.
Okay, one short, additional follow-up question before I take it to Kunal and back to, Suresh. And that is that between the 2015-16 experience and this COVID experience, what have you found has stopped working? And I'm talking more about process. I'm not talking about commercial decisions, right? Those will change. I'm talking about the process that leads to those commercial decisions or leads to the responses that help encounter a situation better or mitigate a situation better.
So I think I can only think about more things that have worked than less, primarily because if we did not have 15-16, I think COVID would have been a much bigger challenge for us. I think our management committees, these sound like, all these, people generally talk about governance with a perspective of board. I have learned that while board at a senior level is exceptionally valuable, having a sense of governance right down to everyday decisions on what you make for owner policies, decisions for what you make for your consumer policies, responses to them, basic cadence across the organization where various reviews happen. I think if not for that, COVID would have been a significant challenge for us. As soon as COVID happened, we knew exactly the 50 people who will be responsible for either creating the first sense of responses tactically and the 3 or 4 teams that will be responsible to enable the transformation in the future. It wasn't, I think now in reflection, I can say it sounded as simple as this. At that point of time, it was quite a bit of action on the floors. But I think all those actions had a rhythm to it. They were not happening like with a few people, wanting like with their personal decisions. They were happening truly as a rhythm. So I think 2015, 2016's learnings were more valuable than, I would have thought. If not for the COVID, we would not appreciate it.
Okay, great. Thanks. Kunal, big pivot moment for Snapdeal as well, right? When the merger fell apart, you had an angry investor who left your board. Now, my question to you is, what did you learn from that? And I don't mean just commercial decisions, because commercial decisions are an outcome of internal processes, of internal thinking, of internal strategizing. And how have you grown since then? What has worked? What has not worked? When you look back in hindsight, do you think you could have done things differently or better?
Thanks, Menaka. I feel that, look, all companies go through transformations.
Sure.
I don't think there is any company like I'm sure if we talked about all the big global names we've spoken about in our various conversations, whether it's Unilever or some of the even Nestle to some degree, although I won't know exact details. All large companies around the world have gone through transformations. Ritesh talked about the transformations at OYO. And as a company, we've gone through our transformations. Most people don't know that we started as a physical coupon book company.
Yes.
Where we were actually selling a magazine of terrible coupons. That's how we started the company, and we moved that to SMS-based coupons, to like online coupons, to then actually starting a marketplace as it stands today. Companies go through transformations a lot, and companies like Ritesh's and ours are always under the spotlight. So every move, left, right, up or down, is generally assessed with a magnifying glass. However, it's a natural course of evolution of most businesses. Sometimes some evolutions seem a bit more significant, but there are evolutions happening all the time.
Yes, and I'm not finger pointing at a particular crisis at your company and suggesting everybody else is fine. I don't think there's a company in the world that doesn't go through at least 3 or 4 transformations in its life. So, don't take it that way. I just meant learnings.
Yeah, so I think from a learning standpoint, one of the biggest learnings I've had over the last many years is the importance of just clear communication with all your stakeholders. And giving them the opportunity to also communicate clearly with you. Oftentimes, in the race to win and the race to move very fast, that communication can sometimes get underemphasized. So one of the things we've done very actively as a company, I think we talk a lot about, like, governance is very critical, but sometimes what is not spoken about enough is the importance of communication, and particularly internal communication. In every time, whenever the company, we've had challenges at any point in our last decade plus journey, I've seen the single most important mantra that has worked in getting the company and the people out of a rut is just transparent, frequent, very authentic communication. And it can be very emotionally and physically draining for the founder or the CEO of the company, because you have to keep saying and exhibiting enthusiasm and transparency every time, because for that one person or that one group of people, they are hearing it for the first time. And I realized that you can almost overcome anything, any kind of crisis, if you are authentic, transparent, and frequent with your communication, with your, particularly, I would say, with your employees. And needless to say, with your board members, with your investors, and any other external stakeholders that you may also have. I remember growing up, there was an Airtel ad where there was a boy and 2 boys on 2 sides of the border, like supposedly our border with our neighbor, and it ended with the tagline, "Barriers break when people talk." And that has always stuck with me, and I've seen that barriers do break when people talk, and oftentimes the biggest lesson as a leader I've learned is that I should always take the first step if the other person isn't.
How do you scale that though, Kunal? As your business, as a young company grows bigger, older, that frequency of communication, depth of communication, personal touch in communication, how do you scale that?
Some things some things have to stay authentic. And in order to stay authentic, you don't have to productize it necessarily. At some level, I think the simplest answer is you have to keep doing it. If as a leader you lead by example and keep doing what you were doing when the company was 30 people or 50 people or 100 people, like for instance, I'll tell you what we do every month in Snapdeal. Since the time I can remember, we do monthly town halls. Many companies do quarterly town halls or biannual town halls, or they'll do big like events. We don't do that. We do very simple monthly town halls where everyone is welcome. The whole company is welcome, virtually or physically. Anyone can send questions in advance anonymously. All questions are covered in every town hall. However rudimentary they may be to do with, why are the paper cups so small in the office, but we will still cover them, because it again drives home that this is a a trustable employer. This is an authentic employer. There are no secrets between us and them. We are all just one team. And when the leader of the company does that, does frequent, authentic, transparent communication, shares the good news and the bad news every month, then you see that percolate very quickly across the company. I've seen, as a result of which, the leaders of various teams will start doing that with their teams, and so on and so forth. When they know that the CEO of the company is not shy of sharing bad news, good news, answering any question, all those apprehensions at various points in the ladder of an organization also fall away.
Okay, fair enough. I'm going to take both the experiences of both these younger companies to the veteran crisis manager on this panel, and who had to deal with, a crisis that we all know now very, very well. He was brought in to resolve it, and he did, an outstanding job of that, as well acknowledged across all stakeholders. Suresh, I come to the Maggie crisis. Now, I'm not going to rehash that because I know much has been written and said about it since then. But today, when you look back at that, what are the thoughts in your mind on whether you got it right, you got it wrong, what companies can learn from it, what processes or structures should evolve from situations like that?
I think for me, there are a couple of lessons that clearly come out of it. Firstly, Menaka, everybody attributes a lot to what I have personally done on this crisis, but I want to say it maybe like a broken record, that it is the team who made the magic happen. It's in a sense, it was their effort, it was their conviction, it was their sweat and their determination to pull the company out of this very unfortunate crisis that we found ourselves. And on a more personal note, the guy who actually launched me back into the market was Kunal Bahl. We had the first 60,000 boxes, which was lapped up in 10 minutes, that went on Snapdeal. And just a few weeks before that, I had met Kunal in my office, little realizing that we will have something of this kind. So it also transformed the company, because we are a brick and mortar company. And suddenly we went to an e-commerce platform. For me, it was a new thing because I've never done it before. So I must confess, a young brand manager gave me the idea, saying that, let's go on to Snapdeal and create something that is going to be a magic for the company. Look, a few things. Learning number one, perception is reality.
Yeah.
And we have to accept it. The fact of the matter is that I think we were trying to do it initially in our own way, which is a very respectful way of talking to the regulator and trying to get across a point of view. And I think that meant, therefore, that there wasn't enough conversation with the one who really mattered, which was the consumer. And let's face it, consumers then, as consumers now, they love the brand. I mean, for them, Maggie is part of their family. It's part of their experience, part of their ilk. So I think that was, so managing perception is reality is very clear. Second, and it's a learning I would really like to give to many young companies. If you were to invest more in culture than in capex, you will have better run companies. Culture is the best vaccination in a crisis. Culture is that unspoken language that everyone follows in order to deliver what they have to deliver without being told, and yet they do it. I've seen this happen during the Maggie crisis. I've seen that happen yet again during the COVID crisis. And here I agree with Ritesh. Once you have been inoculated with a serious crisis, you are awake all the time, and you don't allow yourself to go back to sleep. So I think spending time on culture, which means what? Purpose and values. And the chief executive officer or the promoter or whoever you call it has to be the chief evangelist. What is my time spent on? I must tell you honestly, Menaka, that my time is not spent on strategy and operations and getting into the nitty-gritty of the nitty-gritty. My role as a senior leader in the company is evangelization on the purpose and values. My company is 75 to 80% millennials and Generation Z. So it's a young company. It's a 109-year-old company in this country, 156 years old globally, but it's a very young company. So the young company doesn't need my digital skills. They need my skills and my experience in being able to navigate them through the next hill that they are likely to see, or the next mountain that they are likely to climb. So I think that is important. So culture is very important.
If I may briefly interrupt you there, Suresh, how do you do that? Like, can you give me a specific instance of actually actualizing that evangelization?
One of the things, and I resonate a lot with what Kunal said, it is communication, and clarity. I honestly believe that those who are not wanting to communicate with their people should not pain themselves and pain everybody else by becoming leaders. So communication is extremely important. During the Maggie crisis, I was a colleague to some, I was an elder brother to some, I was a father to some. I was playing 60% of my time did not go on business related issues. It was going in terms of communicating to people like you, communicating to the regulator, communicating to my people, talking to my factories. Fortunately, they were not COVID times then, so I could travel to all the places. I traveled, met all my youngsters. And I think, there's an Irish saying, the fish rots from the head. And when the fish rots from the head, the troubles start and the troubles end when the head has got his head in the right place. And I think that becomes an important element. So therefore, responsiveness, culture, transparency and trust, vulnerability. One of the things that I have noticed in a crisis, a leader never gives the answers. He asks the right questions. That's what leadership is. I don't know the answers. If I knew the answers, I don't need anybody else. Why do I need anybody else? I can do it myself. But I don't know the answers, but I can ask the right questions. And I think vulnerability and humility are two characteristics which are underplayed in this age of hubris. When people want to be billionaires and millionaires and they want to acquire and become famous and want to be on the cover of every magazine, what you forget is that humility. What you forget is temperance. What you forget is a certain degree of maturity, and vulnerability is extremely important. And I think if you do this over a period of time in a transparent, in a continuous way, and I agree with Kunal, you could either do direct communication or you could do it, during the COVID, I was doing largely video communication because I couldn't go and meet anybody. But nevertheless, I think people sense it. People are, and the most under-leveraged asset in this world, unfortunately, are people. We think that person who's in the front line is more interested in drawing his salary rather than working for the company. But how do you account for a salesman in Sikkim who walks for 3 days in a row, 14 kilometers each day to get permission to sell Nestle products? What was his motivation? So I think these are fundamental issues that we need to, and this is at the root of governance. If I want to,
isn't this very individual governance, Suresh? If I may ask you that, what we are discussing right now is what you as an individual leader, or Ritesh, or Kunal as an individual leader has been able to accomplish. Where does the board figure in all of this? Where do the structures that outlive you all figure in all of this?
You translate that into the board and into the corporate structure. If the corporate structure then becomes where capability, competence, ethics, honesty, sustainability, and results. We call it the 5 Ps: people, purpose, partnerships, planet, and performance. If we put the structures around this, and then you have a board, and I'm very proud of the board that we have at Nestle India. 3 out of the 5 independent directors are women directors. And the first questions they ask me is on the people, the safety, the culture, and what are we doing to protect. They are not asking me, first thing is, please show me your ROIC or please show me your EBIT margins. That comes last for them. So I think it's important, as they say, attitudes and culture is infectious. The only task and the only role of leadership is to infect the organization with a culture that outclasses him or her. My only task as a leader is to develop leaders who are better than me. My time will be up in a couple of years, but to develop leaders who are better than me is the only task that I've got. And I think it is possible for you in the corporate structure, in the board, and because the board behaves in a particular way, the management also takes the cues from it and resonates with it. Then the organization also follows it. Yes, leadership is an individual style. So Snapdeal without Kunal or Oyo without Ritesh would be different. No two ways about it. But I think their anxiety is as much as my anxiety to ensure that even if Ritesh decides to now do a SpaceX rather than working on Oyo, he has the bandwidth to be able to take care of the operations of the company. And that is the root cause of leadership success, governance success, competence success, and board success. And this is what, when people like Amit Tandon agitate over the governance of companies, he's talking more about the purpose-led leadership of organizations, translating into the structure, the process, the outcomes, and various other things.
Okay, I'm not trying to understand you incorrectly, but to me, this still seems very individual focused, Suresh. And I'm going to take this question to all three of you. I mean, where and how do you make this a longer lasting structure? I mean, how do you get OO to perform at the level it ought to be, even without a Ritesh, if Ritesh did decide to go and join SpaceX? And I think that's where, when we talk about event risk, we're talking about responses that go beyond just the individual's response, right? That's when I'm a little stuck. What role does the board play? Maybe I can ask Ritesh and Kunal that and see if they have a different learning or a different understanding of how this works. Ritesh?
So I think, first off, this is a great question. And I, of course, first off, wanted to reiterate what Kunal and Suresh sir mentioned, which is about communication. Before COVID, we used to do monthly town halls. Now we actually, for last, I think 50 weeks in a row, I have been doing weekly all hands. And, and the reason was very simple, right? When there was COVID, if the cities went under restriction for some time, suddenly Oyopreneurs and managers were concerned. So having, in my view, an all hands is less about leader communicating with the colleagues. In my view, it is a lot more about everybody coming together and taking stock of a situation, saying, this is where we are. Here are things that are working and here are things that are not. What should we do in the future? And sort of, it's like one of the bigger ways to collectively align ourselves. So I think just open conversations with consumers, merchants, distributors, everybody is just incredibly valuable. I just wanted to reiterate that. I think specifically to your question about saying, how does this be much more institutionalized? I think in my view, first off, I will tell you this, that my value addition in Oyo today is limited to just three things. I call myself Chief Clarity Officer. So my job is to make sure that whenever somebody says that this is something I don't know what way I should pursue, my job is to say that this is the purpose of the company that the board members have, and I, as a leader of the company, have aligned in terms of perspective. And this is what it means for the key second, third, fourth layers of the organization. So I think clarity is critical. Second, being the critical tone enabler, because there are some specific things that the board and the management need to align themselves on. And then it is critical that the tone from the top is consistent across each one of those areas. For example, it could be about how do you conduct yourself? How do you make decisions every day for value of all stakeholders? I think this is the second one, that is constant alignment across people. So you're not, operating in different places. I think the third and probably the foremost, and something that I as a founder had to do, is that I did not get a senior management. I did not get a non-investor board when I started the company. I had to build that over the last 4 years. And I feel that now we are at a place where, of course, I being here, I'm able to add more value. But the everyday decisions of how do we grow our business, how do we make sure that constantly we create better financial, better experiences for users and merchants, as well as better future ideas are now frankly being driven by other colleagues and leaders. And the reason for that is very simple. Majority of my senior leaders have been in the company for over 80% of company's existence. So some of them now know more about the company than I do. So I think at the end of the day, a leader's job is clarity, alignment, and bring top quality talent both in the management and at the same time continuously request for the nomination committee of the board to constantly invite high quality board members as well.
Okay, I'm going to wrap this up with the final question because we are at the end of our time and I might be exceeding it by a few minutes, but I'll put the last question to you, Kunal, in this. I think Ritesh spoke of alignment, and I think that was one of the other things I've been sort of grappling with to try and understand with young companies is the ability to align very clearly across stakeholders. And can you shed some light on how easy or difficult it is? Because everybody seems to think all interests come together in a successful company or a company that is achieving some degree of success. But that's not really the case. And that is the challenge, especially a bigger challenge when they're dealt with in a changing external environment or an internal event that qualifies as an event risk.
Sure, Menaka. Actually, the interesting thing is there is always a lot of alignment when things are going well. Things tend to figure out an interesting way of aligning themselves when the company is doing well. Everyone feels the perception of the company is also good. All disputes seem to find a way of vanishing, whether they are amongst people or commercial in nature. And actually, the true test of a board, true test of a company's mettle and governance structures and communication structures is when things aren't going well. That's when the things start ripping at the seams. I think that's where I resonated a lot with what Suresh said, what also Ritesh said. That's when leadership really matters, right? That's when leaders tend to show how they can bring all these discordant voices together.
But then we're still, Kunal, talking about individual leaders, right? I thought the idea for a growing company is to be able to institutionalize this in some way.
At some point in time, there will be someone leading a company. It doesn't have to be the founder. It doesn't have to be the head. Like, we are not yet at the age where we are AI has evolved so much that the AI.
I wasn't suggesting that. I just meant like a process with broader buy.
Of course, that goes without saying. Look, even a leader will be quite incapable of executing anything if they didn't have the right framework of people in place who are aligned on the right value system. They'll be completely incapable. Just because I know what to do, if my team is not aligned with me or doesn't share the same value system, they will not do it, right? And that is in the end what makes all the difference.
All right. Okay, I think we're at the end of our time, and time flew by really very quickly. Thank you so much to all three of you for your insights. Especially thank you, Kunal. I know you're unwell, but you were able to join us today. So on behalf of IiAS and me, thank you very much. Ritesh, Suresh, thank you for your time today, and thank you for this conversation. And with that, I'm going to hand it back to the IiAS people. I do hope we've laid out some of the broad aspects of event risk, as Amit was keen to have us discuss.
Thank